Welcome, everyone. I appreciate you joining us. Thanks for coming out and listening to our next COVID-19 Economic Recovery Seminar. This one is entitled COVID-19 and Business Income Loss. We're honored to have two attorneys with us, friends from the firm Drew Eckel and Farnham. Actually, both of these attorneys are partners in the organization. We have with us Karen Carabinos. She's had 23 years as client rep in first-party property claims, defending insurance companies in cases such as bad faith, arson, fraud, cyber, property damage claims, and is a prolific speaker through legal organizations and insurance industry-wide meetings across the nation. Eric is a partner as well. He's been a defense attorney for 13 years, specializing in construction, malpractice, first-party property insurance matters, and represents clients' investigation of large-scale property claims in state and federal courts. Thank you both for being with us. We've been doing these webinars really to get as much information out to the local community as to anything that would help them recover from the damages that is being inflicted upon businesses because of COVID-19. And I know this is an area of specialty of you guys. I talked with other attorneys in the organization. They both said, these are our two resident experts that can talk about, how these insurance claims and businesses that have work stoppage insurance, you've got some information that these businesses need to hear. So, Karen, Eric, I'm going to turn the floor over to you. Thank you for joining us.
Well, thank you, Scott, for inviting us today to share our presentation on insurance issues that are implicated by COVID-19 and business income losses. And we certainly thank everyone who is watching this video. And as we're talking about business income losses, we certainly hope that everyone's getting back to business as usual. As Scott mentioned, Karen and I will be discussing a checklist today for provisions that may be contained in your insurance policies that could impact the recovery of a business income loss that you might have suffered as a result of the COVID-19 shelter-in-place orders that were issued here in Georgia. Karen's going to start us off.
Hey. Thank you, Scott, and thank you, Eric. Because we are lawyers, we have to do a little bit of disclaimer that we're just providing general information, that we're not creating any type of attorney-client relationship with you guys. We'd love to maybe down the road, but right now we're just going to give you general information. And as Eric talked about, that we wanted to provide you guys with a checklist. This is like a checklist that we use for our clients, our insurance clients, when we get a case to determine whether there is coverage, whether it's excluded. And so these are basically the buckets, if you will, that we're going to talk about today. The first is business income loss coverage. And if you have read anything in the news or seen anything on TV, this is the area where most businesses are trying to get coverage under the terms of their policy. I was in a webinar just last week, and there, at last count, there was 139 cases that have been filed across the U.S. in which restaurants, dental offices, even casinos are trying to recover business income loss as a result of COVID-19 and the sheltered-in-place orders that have been issued. So we'll talk about that. The other coverage that we'll be talking about is something called ingress and egress. There's civil authority coverage and extra expense coverage. And then we're going to talk about two of the major exclusions that we see that might impact whether you as a business owner would be able to recover any business income loss. And that's force majeure and the virus and bacteria exclusions. Eric?
Thanks, Karen. So it's elementary anytime you're submitting a claim to your insurance company that the claim and the damages be covered and not excluded. Coverage language will sound something like we will pay for the direct physical loss of or damage to covered property at the premises that are described in the declarations caused by or resulting from a covered cause of loss. And then the exclusions will sound something like, we will not pay for loss or damage caused directly or indirectly by any of the following. Such loss or damage is excluded regardless of other causes or events that contribute concurrently or in the sequence of the loss. And then once you have your exclusion section in your policy, if you look at it, there'll be a number of things specifically listed that are excluded. And then as Karen just mentioned, we're going to go through a couple of exclusions we think could apply in the context that we're discussing today. And those exclusions will often be found as endorsements to your policy, so separate pages that are attached or added on to your policy. Karen is going to walk us through the basic coverage for business income losses, and then we're going to explore, as Karen mentioned, some of the exclusions that could impact recovery of a business income loss caused by COVID-19.
Okay. So let's take a look at the most common coverage that is being raised since COVID-19 has hit the U.S. And most of your commercial policies provide for some business income loss coverage. And it's usually defined as the actual loss of business income sustained during the period of restoration due to the necessary suspension or delay of operations caused by direct physical loss of or damage to property at a location directly caused by covered peril. And I know that's a mouthful, and we'll try to break it down for you. So let's just take an example. Let's say if a tornado, which is a covered cause of loss, that's something that the insurance company is going to pay for, damages your business and causes your business to cease operation for a period of time, then that business interruption or business income loss coverage would likely pay for any lost income that you have suffered until the damage can be repaired and your business can be restored. Eric, if you go to the next slide. What the issue is now with COVID-19 is what is direct physical loss or damage, because as the definition of a business loss, as you just saw, said that the suspension of your operation had to be caused by direct physical loss of or damage to property at your location. So here in Georgia, the most cited case that has been issued by the Georgia Court of Appeals is this Affleck versus Chubb and Son decision that you see on your screen. And direct physical loss was defined by the Georgia Court of Appeals as an actual change in the insured property, that's like your premises, that was then in a satisfactory state, and then something like an accident or some other fortuitous event, meaning an unplanned event, directly caused your premises to become unsatisfactory for future use or requiring repairs be made to make it so. So in determining whether or not there's a direct physical loss, if you have a case here in Georgia, I guarantee you that the court is going to look at that first. And so let's just talk about what that case was about, the Affleck case. In that case, the insured filed an action against its insurance companies, seeking coverage for costs of converting its computer systems to avoid the Y2K, year 2000 computer problems. Remember, we all thought there was going to be some computer issues that would maybe cause us to temporarily cease to operate. Well, in that policy issued by Chubb, they covered any direct physical loss or damage to covered property. So in determining whether the cost that the insured incurred to convert their computer systems, they were looking at whether it was a direct physical loss. The court cited to that particular definition that's on your screen. And the court noted that the term direct is defined by most dictionaries as without intervening persons, conditions, or agencies. And they said, while they've been unable to find any Georgia precedent construing the term of direct physical loss or damage, the common meaning of the words and the policy's as a whole indicate that there has to be an actual change in the property. So in this particular case, they said that the damage that was found by the insured was merely a defect in its computer systems, that it existed from the time the systems were originally created, and that was done by design. And because the insured did not allege that any accident or fortuitous event had changed the computer systems, they said they suffered only purely economic damages, which did not constitute a direct physical loss of or damage to covered property. And I actually had a case back in 2014 that was somewhat similar to that, involving a heart center up in Gainesville, Georgia, in which they had a generator that was used with their PET scans, and the manufacturer of the PET scans asked it was basically a voluntary recall, and asked them to stop using the generator because there were some safety concerns. And so following the manufacturer's request, the heart center stopped using the PET scanners, and then days later the manufacturer said send all of the generators back, which they did. And there was a period of time of 7 months that the heart center did not perform any PET scans, and they filed a claim with their insurance company asking them to pay for their lost business. And the Judge O'Kelly with the federal court here in Atlanta said that that was not a direct physical loss because there was basically nothing wrong with the generator, and they returned it at the request of the manufacturer, not because there was something wrong with it. So in order to obtain coverage resulting from COVID-19, the existence of the virus would need to constitute a covered cause of loss, which then results in physical loss or damage to your property. So this is unlike a fire or other causes of loss that results in visible damage to the property. And so as businesses across the country have been closed because of a shelter-in-place order, they may be closing even though there's no apparent or visible damage at all. So what you're going to have, that's going to be your biggest hurdle in order to get a business loss, is whether you can demonstrate that there is a direct physical loss in covered damage. There was one of the very first cases was this Ocean Grill, which was a restaurant that filed suit against its insurer, Lords of London. And they also sued the governor of Louisiana and the state of Louisiana, saying that there was a covered loss because the governor had barred any public gatherings of 250 or more people and provided no exceptions for the restaurants. So this one is going to be one that was one of the very first cases that was filed regarding a business interruption loss that we're looking at very closely. So you need to really keep your eye on this particular case, and we'll be providing updates through our website. And Eric's going to talk to you about whether there's been a necessary suspension or delay of your operations, which is another key element.
Well, and as Karen was just saying, there has to be the loss has to be due to a necessary suspension or delay of operations, and you might be thinking to yourself, well, that absolutely occurred. My business closed. I was shut down for a period of time. I might still be shut down. But really, truly, the key word is necessary. Was it necessary for you to close your business? And in order to correctly look at whether it was necessary, you have to examine your particular type of business and determine, well, were there alternatives to closing? So, for example, if you have a business that has an office staff who normally would report to work each day, could your office staff have worked from home? Maybe they would not have been as efficient. Maybe it would have cost a little bit more to have them work from home, and we'll discuss possible coverage for that in a minute. But was it possible, if they could have worked from home, would your business have been required to close? Other examples, of course, everybody sees the restaurants going from dine-in to take-out, only curbside pickup, that sort of thing. While it's certainly additional expense in doing that, the ability to at least try takeout means that restaurants weren't required. It wasn't necessary for them to close completely. Maybe your company involves the sale of a product, and maybe you've had a prior limited basis of telephone sales and web-based sales, and the primary focus of your business has been in-person sales. Well, during the pandemic, was it possible for you to increase your ability to sell by phone or to sell on the internet? Those would have been alternatives to you closing, and if the alternative existed, then it was not necessary for you to close your business. And then the final example we have, it would be changing your hours, or simply was it possible to change the way that your business operated so that you could accommodate customers if you were considered a necessary business. So, for example, a large-scale example would be Home Depot. Everybody's probably been to Home Depot on a Saturday in the last 2 months and had to wait in line to get into the business. Business hours changed, those sorts of things. So in sum, your policy requires that you mitigate your damages. And in order to do that, you have to examine your specific type of business and determine whether there was an alternative to closing. Even if it was a temporary alternative, and even if it would have required additional expense, if the alternative existed and was available, did you try? If you tried and you weren't able to be successful, then you would have a good case that you had a necessary suspension. If alternatives for closing were available and you didn't explore them, then it might be a harder case to make to your insurance company that your business was necessarily closed or necessarily suspended during the period of this pandemic. Now, Karen's going to walk us through the civil authority coverage that most people have in their policies.
Yeah. The civil authority coverage is just like what we're seeing, the shelter-in-place orders that have been issued by either the governors or the cities or even the counties. And civil authority coverage triggers payment for a business interruption loss or a loss of business income. It still has that direct physical loss of or damage requirement I previously discussed. But the loss for a civil authority is not necessarily the damages that occurred at your location, but to other premises. So to invoke coverage under the civil authority coverage, the shelter-in-place order or the civil authority order must prohibit access to your location, but due to a direct damage to property of other. And insurance policies may even condition coverage on other requirements that you've really got to take a look at your policy and analysis of the law in the applicable jurisdiction. So I talked just a minute ago about that Ocean Grill case, and part of their claim was really about the civil authority, about these orders from the governor and the mayor of New Orleans. And it's important to look at the civil authority orders that you may claim are causing or prohibiting access to your premises. And let me just go over one of the orders. The governor's order in Louisiana says, because of the ability of COVID-19 virus to spread via personal interactions and because of physical contamination of property due to its propensity to attach a surfaces or two surfaces for prolonged periods of time, that's when they're going to do the shelter in place. So that particular order did not say anything like about it was related to the health and welfare of the public, but it cited physical contamination of property. So that's a little bit different. It's like if you look at some of the orders that have been issued by Governor Kemp and the mayor of Atlanta, they have talked about that it is based on the health and welfare of the public, not necessarily that there has been physical damage caused by COVID-19. So if you decide this is something that you want to do for your business, you really need to look at the specific civil authority order that you're going to rely on. Right? Then there's another particular coverage that also could be applicable, and this is one called ingress and egress. It is similar to the civil authority coverage I just mentioned because it is triggered when your property is inaccessible as a result of a covered peril. And it's looking again to physical damage that might have happened to somebody else's property that prevented access to your property. We have not found a lot of cases, or any case rather, in Georgia interpreting this particular policy provision, and I've been practicing this type of law for 24 years and I've never seen it come up either, but it is coming up in the cases that we have been seeing related to COVID-19 and claims for a business income loss. So we bring that to your attention just for you when if you're going to decide you're going to make a claim. That's something that you and your attorney probably need to take a look at. Again, it's just a part of a checklist of a particular coverage provision that you might want to look at to see whether or not you have a covered loss. There is a City of Chicago versus Factory Mutual case that's cited here, and it does require a physical damage requirement as we previously discussed. Okay, Eric?
As earlier when I was talking about the duty to mitigate your damages and the alternatives to closing, I mentioned that in exploring those alternatives that you might have an extra expense involved in that. So, for example, in the context of your office staff working from home, maybe your office staff needed a laptop or an updated computer to log into your remote server. Maybe your office staff needed a printer at home or a scanner at home in order to do their job. Maybe your own network connection didn't accommodate remote access. Those would be extra expenses that you would have incurred in order to keep your business going. In the example of the restaurant going from dine-in to takeout, the things that we take for granted, the plastic bag or the paper bag that we carry the food home in, the extra napkins, the plastic flatware, the containers that the food's packaged in, those are things that while individually have a minimum cost, when you shift your business to operating only as a to-go restaurant, can be significant. So those are examples of additional expenses. In your policy, the extra expense coverage will look something like, or sound something like, we will pay necessary extra expenses that you incur during the period of restoration that you would not have incurred if there had been no direct physical loss or damage to property at the described premises. There are generally two types of coverage for extra expense. The first type is the cost that the insured incurs to reduce or avoid a business interruption loss. The two examples that I just gave, the restaurant going to take out or the office staff going to work from home and the increased cost involved, or the costs that are incurred by the insured if there had been a direct physical loss or damage to property, if there had not been a direct physical loss or damage to property caused by or resulting from a covered peril. Just with the business income coverage that Karen explained earlier, the extra expense must have been caused by or result from a covered cause of loss, meaning that the loss claimed must have been covered under the particular provision of the policy and not otherwise excluded. So just as with all of these categories, this is just something else to consider if you are thinking about presenting a claim to your carrier. Review the extra expense coverage and make sure that it is both covered and the type of that the cause of loss is covered and not otherwise excluded. The first exclusion that we want to talk about is the virus and bacteria exclusion. The history of this particular exclusion dates back to the early 2000s during the SARS outbreak. Certainly another pandemic that we've experienced, not as great a scale that we're going through now. Back in the early 2000s, in response, most insurance companies in the United States added an exclusion to commercial property policies, and it's found in the ISO form that we have listed on this PowerPoint slide. And if you look at that ISO form, which is more likely than not found in your commercial property policy, it specifically excludes coverage for losses that are caused by virus and provides that it applies, among other things, to business income and business interruption coverage. This is an important exclusion when we're talking about COVID-19 related business income, because COVID-19 is a virus, and it's certainly this presentation is on business income claims. So this is an important point that needs to be addressed if you're considering making a claim for business income loss. A little bit more background on the exclusion itself. When the form was being drafted by ISO, the drafters put together a list of notes or sort of an explanation section, which isn't unusual. Most statutes or laws will have a legislative history that we can go to that tells us what the point of the law was, the goal of the lawmakers. Most model rules, for example, will have a section that help us interpret the meaning of the rule. The same thing here. And when the drafters were putting this together, their sort of notes section stated, quote, while property policies have not been a source of recovery for losses involving contamination by disease-causing agents, the specter of pandemic or hitherto unorthodox transmission of infectious material raises the concern that insurers employing such policies may face claims in which there are efforts to expand coverage and create sources of recovery for such losses contrary to policy intent. In light of these concerns, and this is the important language, we are presenting an exclusion relating to contamination by disease-causing viruses or bacteria or other disease-causing microorganisms. In application, the exclusion precludes coverage for damages that are, quote, caused by or resulting from virus, bacterium, or other microorganism that induces or is capable of inducing physical distress, illness, or disease. It's a strong exclusion, which was further reinforced in Georgia back in March of this year by the Georgia Insurance Commissioner. On March 17th, 2020, Commissioner John King issued a bulletin in which he stated, quote, viruses and disease are typically not an insured peril. I'll say that again. Viruses and disease are typically not an insured peril unless added by endorsement. Most policies generally exclude loss caused by or resulting from any virus, bacterium, or other microorganism that induces or is capable of inducing physical distress, illness, or disease. And back in March, as part of the bulletin, the commissioner went on to explain that while coverage is typically excluded for such causes of loss, that he was approving a new ISO form that would allow, if offered by an insurance company, would allow an insurer to pay an additional premium and add coverage. So if your policy has the virus and bacteria exclusion, which it probably does, based on the stated purpose of the exclusion and the Georgia Insurance Commissioner's March 17th, 2020 bulletin, there's a strong chance that there would be coverage concerns should you present a COVID-19 claim. And again, this is just another example of something to consider as part of a claim with your insurance company. The final topic that we wanted to cover is the force majeure. The term means a superior force event. Black's Law Dictionary defines force majeure as an event or effect that can neither be anticipated nor controlled. Most commonly referred to as an act of God or something that's beyond the party's control. And typically where you hear force majeure being applied is in a contract. So for example, let's say there's a contract for a band to perform at an outdoor event and a storm damages the venue. And because of the act of God, the band can't play And so the force majeure, or the act of God, allows the two parties to break their contract without being penalized. That's the most common example, but we find policy provisions for force majeure, which typically would address coverage for such events. Just as Karen mentioned with the ingress and egress coverage, there is a little case law in Georgia addressing the force majeure in this specific context. We have been looking at the issue across the country, and while there's not a great deal of case law interpreting it, the trend has been against coverage for business interruption in this context. But just so that you understand the full scope of the analysis, there's a two-step test, or a two-step analysis for force majeure. First is, does the insurance contract or your policy specifically reference such things as epidemic or pandemic? And two, does your insurance contract speak to government mandates, for example, the shelter-in-place orders that we've had in Georgia, mandatory quarantines, forced business closures? If you have both of those of the two-step test in place, then you might have a good argument for coverage. If you have one of the two, then you certainly have a weaker argument. And then if you have neither of those in place, then it would be an uphill battle to establish coverage. Again, just with all of the topics that we were discussing, this is just yet another thing to consider if you're thinking about presenting a claim to your insurance company for business income related loss related to COVID-19.
All right, that's all we've got, Scott. We appreciate you giving us an opportunity to discuss this. Eric and I would just encourage that anybody who had a business interruption loss as a result of the shelter in place or other COVID-19 related issues, that you do review your policy thoroughly with an attorney before making a claim with your insurance company.
Well, thank you both, Karen, Eric. I really appreciate you giving us this information, sharing it with us. Everybody sees their email address there. Also, if you have a question, feel free to submit the question to me. I will pass it on up to them, and we'll see if we can handle it that way. Eric and Karen, if you don't mind sticking around with me for just a moment. All of you that have joined us here today and watching the video in a later point in time, thank you for joining us, and that will be it. Have a great day.